Okay, so we talked about the extent to which investment is beneficial or not. Um, so what we need to decide is, well, what's going to determine the level of investment? And what you're thinking about here is a good way of starting is think about the level of the individual firm and kind of saying, well, this business is going to take a risk. So what's going to make it more likely that they're going to commit funds that, their own profit or borrow money that they could have used for something else? What's going to make them commit? And a number of factors that make investment more likely or less likely. So one is kind of GDP growth. So if the economy is growing, then this creates a number of incentives for firms to invest. Firstly, when the economy is growing, then what that means is that AD is rising generally. So secondly, firms have more profits. So in terms of their own funding, their own ability to invest, that's greater. And secondly, there's more reason to invest. Again, because there's an increase in demand for the firm, so they may need to invest. They run out of capacity, they can't meet customer orders. And B, because there's lots of demand, there's more potential profit. So they're already profitable, but because demand is rising, the economy is doing well, they can see that this investment is likely to pay off. So they've got more money to invest with, and they're more likely to benefit from that investment. So economic growth is, and again, you've got this process whereby growth triggers investment. Investment itself creates more jobs, which then triggers more growth, and you've got this virtuous cycle. Likewise, in a recession, what you're going to find is that firms don't want to invest because they haven't got any profits, and also they don't need to invest, because they already have lots of spare capacity. Secondly, interest rates. So we talked about interest rates in terms of how they affect consumption, and they're likely to affect investment as well. Generally, a decrease in interest rates is likely to lead to an increase in the level of investment. Firstly, because it means that borrowing is cheaper. It kind of makes the investment less risky. Or looking at it another way, more projects. You think about whether to do a project or not. If interest rates are high, you're going to be more cautious because you know that it's going to be very expensive. If interest rates are low, you're more likely to take a risk. You're more likely to give it a punt because the cost of borrowing the funds is lower. And secondly, we know that a decrease in interest rates is likely. We know that a decrease in interest rates is going to increase consumption, which is going to increase aggregate demand, which means that the project itself is likely to be, again, more profitable. So lower interest rates, it creates the demand that makes the investment worthwhile, which is the second factor, and also it makes the cost of financing the project lower. So therefore, investment is more likely to take place. The obvious third factor is going to be taxes. Especially here, we're thinking about corporation tax. So corporation tax is a tax on company profits. Hence the word corporation, which is just another word for businesses. Anybody who thinks there is a cooperation tax should not think those things. So a cut again. If there is, say, a decrease in corporation tax, then again that's gonna stimulate investment for a couple of reasons. Firstly, it means that firms have more retained profit. Because they're paying less tax, they keep more of their profit, therefore they can do more investment. Secondly, obviously, the reward for investing is higher. If you invest and you make a profit, then you keep more of it. So you've got more money to invest and more incentive to do so. I mean, obviously, it's a question of how big the change in corporation tax is and so on and so forth. Yeah, but it's noticeable that countries like Ireland, where corporation tax has in recent years been very, very low, have attracted a lot of foreign direct investment. Lots of companies like Apple and Dell and so on have based themselves in Ireland, and they're not there for the weather, that's for sure. Other factors, the one that Keynes said he thought was the biggest factor. He called it kind of entrepreneurs' animal spirits. And what he meant by that really was just kind of business confidence. And he said, well, look, you can take all of these factors. It doesn't really matter, if businesses are confident, then they're going to take that risk. If you're feeling good about the future, then you're likely to invest. If you're not, if you have concerns, if you're worried, then it doesn't matter how favourable the other factors are, businesses aren't going to take that risk. Because you're talking about big money here, usually, for investment. For even for a small firm, you're often talking about millions of pounds, and that's money that you could have just kept. So why risk it all? If you're not feeling good. So there's not much to say about this, but it is a very, very important factor. That idea that, and he said that he called it animal spirits. It's just it's not rational. It's your kind of gut feelings. And if they're not, if you're not feeling good, then investment isn't going to take place, because investment is rarely absolutely essential. Certainly not for all businesses all the time. You can defer it. You can wait. So if you're not feeling confident, then it's likely that investment will be deterred. And then you've got a whole variety of other factors. So when you're thinking about foreign direct investment, are you going to attract multinationals? Then what you're then thinking about things is stuff like infrastructure in a country. If there's good infrastructure, foreign multinationals are more likely to come. Skills. Kind of tax breaks, for example. We talked about tax a minute ago. But one of the reasons that the UK film industry has done particularly well over the last 20 or 30 years is that it has major tax advantages. So there are major reasons to locate. And once it starts, of course, once you've got a few film companies here, then you'll get some more. So Amazon's filming some prequel to Lord of the Rings. And they've just announced that they're relocating production from New Zealand to the UK. And it's not all down to tax, but tax created and helped to develop the film industry. The film industry then has the infrastructure that attracts more film companies. So there are lots of factors that they're going to affect the overall and just kind of stability, it's kind of macroeconomic stability. You want to go somewhere where you know that there's not going to be crazy stuff happening in the economy. So politics. I mean, the list is endless, really. Labour costs. So minimum wages. So there are many, many factors that are going to affect it. And so a lot will depend on the sort of question that you're asked. So we identified kind of 4 big ones that are generally true, but there are lots of other things that might have an impact as well. And your job really is just to kind of say which ones seem to be the most important in the case that you're looking at. If you're just writing an abstract essay, then take your pick.